Hi everyone, my name is Jenny Wright. It's really good for me to be part of this presentation today, and I'm grateful for Ian for inviting me. So what I'm going to do this morning or this afternoon, depending on when you're listening to this, is talk to you about your pension, give you a little bit of information about that, and we will be sharing the slides after the session as well. So there's quite a few links on here, so don't worry if you don't write them down at the time. You will get a copy of the slide deck, and we'll be able to use all the tools and resources that I'm linking to and talking about on this session. So my name's Jenny Wright. I am the Regional Partnerships Manager for Yorkshire and Humber for an organisation called the Money and Pension Service. We're an arm's length body of the Department for Work and Pensions, which basically means we're sponsored by government and all the tools and resources and information is free for you to access. The other thing to point out is that this can all be signposted. So if you're, if you want to share with your friends and family, that's great. But if you are working with individuals, clients, service users, patients, you can signpost them to this information, and it's a safe space for them to get that really useful information and guidance about their finances. And we do that using the Money Helper website, which has also got a free telephone number, and there's web chat and WhatsApp available as well. So whilst we're going to focus on pensions today, I just wanted to touch on the fact that we do cover everything from pocket money all the way through to pensions at Money Helper. If you are thinking about buying your first home, starting a family, you want to change your car, you want to know about holiday insurance or save some money, there is something about that on the website. So please feel free to have a look round and get the information that you need. But what we're talking about focusing on today is your pension journey. And it's never too early or too late to start planning for your retirement or understanding what you've got. The sooner you do engage with your pension, the better off you're going to be, because you know what you've got, and you've got then time to start taking action if you think you need to. So the first thing I'm going to really touch on is how much money do people need to live on in retirement. So this organisation, the slide that I've got here, is set up by an organisation called the Pensions and Lifetime Savings Association. And they produce every couple of years the retirement living standards, and they updated this in April. So it is based on present day figures. And they are suggesting that a single person, to get a very basic standard of living in retirement, that's sort of having enough for food, bills, and a little bit of spending money, not much, you really need around £14,400 a year to live on. That doesn't include housing expenditure either. So if we think about £14,400 a year, where are we going to get that money from? So we might get some of it from the state pension, which I'm going to talk about in a bit, but also from our workplace pension and any savings that we might have built up as well. So that can help us to provide for ourselves in retirement as well. So remember the 14,400. So once we've got that figure, we need to know what we're spending now while we're at work. And the likelihood is we're going to be better off while we're at work than when we retire. So we need to know what we've got coming in and where we're spending our money. So this budget planner is on the Money Helper website. It's a really useful tool. It's easy to fill in. You put in where you get your money from each week or each month. So that might be salary, wages, any benefits that you might be receiving, any pension that you're already taking, any side hustles if you're selling things on Etsy or eBay, things like that. You put all that in there. Then it will ask you where you're spending your money. So you go through your bank statements and add in all those things where you spend money. And remember those things that you pay for annually, like car insurance, home insurance, anything like that. Add that in as well, and it'll break it down to a monthly figure. Once you've done that exercise, it will give you a really nice pie chart which shows you where you're spending your money, and that'll give you a bit of food for thought as to what you're spending it on. Can you make any changes now? Will that help you to save more money for your pension, if there's tweaks that you can make. So it's a really useful thing to do. And once you've done that, you can think about how much money you are going to need to live on in retirement. I know we've mentioned the 14,400, but that might not be the same for everybody. So this sort of works through where you might save money when you're retired. So you might not be commuting into work anymore. You might not need to buy a new suit every year. But it also thinks about, well, where you're going to spend more money. So hopefully you might want to go out and do more things, go and visit people, perhaps take the grandkids out. So it just prompts you to think about those things and fill in that sort of sheet, and it will give you a figure that you need to be aiming for in retirement. Excuse me. So talked a bit earlier about the state pension. So most of us, if we've been working for more than 10 years, we will have built up some national insurance credits, which means that we will have some form of state pension. And to achieve a full state pension at the moment, you need at least 35 qualifying years. But you can access some of it if you've been working for 10 years or more. And the full state pension at the moment is £221 a week, which equates to £11,500. So we've got about a £3,000 gap between the state pension and the retirement living standards suggested amount as a minimum. So that's good to know. We need to fill that gap. But to find out if you're on track for that level of state pension, you can check your national insurance contributions and get a state pension forecast. So use the gov.uk website for that. And you can also find out when you are likely to be able to access your state pension, again using the gov.uk website. It'll tell you how old you are going to be when you qualify for that. So that's really important information to know and understand. The other thing to understand as well is the two main different types of pensions, and depending on who you work for will determine which type of pension that you have. So the first one is what's called a defined benefit pension or a final salary pension, and that's really now mainly for public sector workers. So it might be NHS, teachers, local government. You might have a defined benefit pension scheme. You might also have other types of pensions as well, because a lot of us now have had more than one job in our working life. But most of us that aren't in the public sector have got what's called a defined contribution pension scheme, and that's the auto enrolment that we've most recently had, or stakeholder pensions as well fall into this category. So with a defined benefit pension, you know what you're going to get when you retire. That's not up for negotiation. You know exactly how much you're going to get paid. It's worked out on a percentage of how long you've worked and what your salary was. But for the defined contribution pension, which most of us have, we don't know exactly what we're going to get when we come to retirement. We know how much is going in there every month or every year, but that's been invested in the stock market, so that can fluctuate and it's impacted by changes to the stock market. But what we do know is that money is built up and invested for us to use as money in retirement. We're also likely to be able to access 25% of that as a tax-free lump sum as well. And we can access that currently from the age of 55. So there's different ways of accessing that pension as well. You can do it in different ways, and I'll touch on that in a bit. But they're the two main types of pensions that you can have. And a lot of people say to me, well, is it worth saving into a pension? What's the benefits of saving into a pension? And I just really wanted to show you this slide and talk you through it, so it's something for you to have a little bit of a think about. So if you said to me, okay, well, I'm earning £2,000 a month, my gross salary is £2,000 a month, and I want to save £80 a month. And there's two ways that you could do that. You could save £80 a month into a bank account. So you might just put that into a normal savings account or a cash ISA, and £80 is going into that savings account. However, If you have a workplace pension, so an auto enrolment pension, something like that, and you pay £80 a month into that pension scheme, you will also get tax relief on that, which means the government's going to pay an extra £20 into there, and your employer will pay money into it as well. So in this example of £2,000, you've got your £80 going in, you've got £20 tax relief going in, and there's also your employer's pension contribution as well of £60. So in total, we've got £160 going in versus the savings account of £80 going in. So a bit of food for thought there. It is worth thinking about, would I like free money into my pension scheme to help me have an income in later life? I hope that was easy to understand, but I think it's quite powerful, that one. And the other thing is, why is it important to look after your pension? Well, that's what's going to pay us our income when we come to retire. It might mean that we don't have to keep working forever if we understand our pension better. We've talked about state pension. We know what that is. And also your work pension can generally be accessed a lot earlier than the state pension as well. So it might give you a bit of flexibility where you can take partial retirement and drop a couple of days. Get tax relief on the money that you pay into the pension, so it's a tax efficient way of saving, and you can also take 25% of your pension pot as a tax-free lump sum. Your employer can pay into it, so a little bit of free money there, and also pensions can help with inheritance tax planning, because some of your pension can be used to leave to somebody else if you died before you took the pension as well. So they are important, and it's important to understand about your pension. So just briefly mention there what happens if you die. State pension, so the new state pension, that's sort of post 2016, it's an individual state pension, so that can't normally be passed on to a spouse or a civil partner. But again, you would need to look into that in a bit more detail just to get full information on that. If you've got a defined benefit pension or a final salary pension, the death benefits depend on the scheme rules, but normally you would only be able to sort of share that with a partner, a spouse, or a dependent child. However, if you've got a defined contribution pension, that pension value, so I said that pot of money, can be transferred on your death to somebody that you want to transfer it to. So you would fill in a nomination of beneficiaries form. It's really important that you do that as well, so that the pension trustees know that who you want to leave that money to on your death. So it's a little bit on the bottom of that slide. A nomination form tells the scheme who you'd like to receive any benefits payable on your death. There's a link on that as well, and that shows you what to do. But if you've got more than one pension, you need to fill a nomination of beneficiary form in for every single pension that you've got. The other thing is more than one pension. It's like I planned this slide deck. Tracing old pensions. Some of us who've been working a long time have forgotten that we've got pension schemes with previous employers. But what we can do again is use the gov.uk website, searching for pension tracing, and we can find out if we've got any entitlement to other pension pots that we might have forgotten about. There's information on the Money Helper website on how to do that as well. So again, really useful part of planning for your future is finding out what you've already got, and then that you might be pleasantly surprised. The other thing that I think is a useful tool that we have on the Money Helper website is our Money Midlife MOT, and this is aimed at people from age 45 to 65. It takes about 5 to 10 minutes to do. Asks you a series of questions. Have you thought about your pension? What have you got already? What are you worried about? And it gives you a series of actions after you've completed it to go away and do or think about. But again, really good use of 5 minutes of your time to go through that process and get some next steps to plan for your future. So Really, really important. And this is one of the reasons why people don't like to engage with the pensions, because they are really scared about pension scams. And there are a lot of pension scams about. And again, this is important to know where the safe places are to get information from. So there's loads of different scams about around pensions, but if you get to around 50 to 55, you might start finding out that you're getting emails about pensions. You might have phone calls about pensions. Anybody that you don't know, or anybody that's contacting you out of the blue, you need to not engage with those, because your pension provider won't contact you out of the blue. They will send you information about your pension, but they won't ask you for information about your pension. They won't ask you to move it into parking space, invest it in parking spaces in Dubai, or sort of get rich quick schemes. So really, really important that you can't access your pension before age 55. That's a massive red flag. If somebody's trying to make you make decisions really quickly, that is a red flag as well. And if it sounds too good to be true, it genuinely is. So you need to take a step back, take a breath, and think, have I contacted these people? Do I know anything about them? And just ignore them if it's something that you've not sort of tried to get in touch with yourself. Really, really important. And then the other thing that we're trying to raise awareness about at the moment is pension credit. So this is for people that are already retired and in receipt of their state pension, but they might only be getting a state pension, and they might be entitled to some extra money on top to make that into a livable amount of money. So anybody that's older than 65 at the moment, if you've got older parents or older relatives, ask them if they're entitled to or if they've ever thought about applying for pension credit, because that could give people a significant amount of extra income. It also opens up other benefits like housing benefit, council tax support, additional winter fuel payments as well. So we know that there's billions of pounds that aren't being claimed from this, so we really want to raise awareness around that. So if you know anybody that's older and that are in receipt of the state pension, just ask them that question. And again, on the Money Helper website, there is information on how to claim that, or at least apply for it. So we've covered loads and loads. As I said, the slides will be shared, but just think about these sort of key areas. So do we know if we've got any old pensions that we've forgotten about? We know where to trace them now. We know how to get a state pension forecast, and we know how important the state pension is in planning for our future. We also know that we need to nominate beneficiaries of our pension, make sure that money goes to the people we want it to should we die. There are tools on the Money Helper website to help you calculate how much money you're already going to get in retirement, and then you can think about, do I need to pay more in? Should I save money elsewhere? Use the budget planner. Whether you do that for your pension planning or just in general, it's a really good exercise to go through. So we've got the budget planner on the website, and we've also got the midlife MOT. And there's at the bottom of that slide there's a link to how to claim pension credit as well. So lots of information there, but all really useful to help you make a plan for your future. And there's loads of ways that you can contact us. As I said at the beginning, this is a free telephone helpline for both pensions and money guidance. And if you're over 50 and you've got a defined contribution pension, so that's like the auto enrolment pension, you can have a free pension wise appointment with us as well that will go through all your options towards your pensions. It'll touch more on pension scams, help you think about how to plan for the future. So loads of information there. I hope you found that useful, and please do have a look at the slides when you get the opportunity as well. Thank you very much.